So let's just take the conversation forward with Atul Suri of Marathon Trends. He represents Marathon PMS actually. Atul, good morning. Fantastic to have you back. Atul, if I look at the screen, barring today's blip, it looks like a new bull market. Nifty kissing distance away from a record high, Bank Nifty at a record high. So whereas the screen is telling you that it's a bull market, it does not feel like a bull market.
Nikon, see, we've had about a 10% move in the Nifty in the last 5 weeks or thereabouts. So a 10% move on the index is a lot. So it's pretty expected that the market will correct. And this is not just the case in India, it's global. You look at all global markets, they've had a dream 3-4 month kind of rally. Most have rallied more than 10%. India, in fact, was a very late catch-up act. And it's only been about a month old, but the US, etc., have been 3-4 month kind of rallies. So it's very natural for markets to not keep going at that almost vertical pace. They will correct, they will consolidate, and that is something what you're seeing in India. If you look at the Nifty, I think we were at just about a few hundred points from lifetime highs. And the Bank Nifty, which I think is the lead indicator, went into lifetime highs and almost 4-5% higher. So I think that the Nifty can correct. It can correct to around 11.2 or thereabouts. But the larger picture, I think, is still very bullish. I feel that we will get to new lifetime highs, and I think we'll push towards 12,000. The question is that the feeling is very different. That is true, because the space where everyone is overweight or has been overweight or has made money in the last 2 to 3 years has been in the mid cap. So most individual portfolios you'll find are mid cap, small cap dominated. Even with the most of the funds, you'll realize that who did very well in the last 2-3 years were all small and mid cap focused. And the market actually has totally changed. So that is why for the year gone by, one of the best performing would be all the index funds, simply because of no small or mid caps out there. So what you feel is that yes, the index is higher, but most portfolios are still struggling. It's this ratio divide or this allocation between the mid cap and the large cap. So wherever the mix is very high large cap focused or only large cap funds, you'll find have done much better. Wherever portfolios or funds which are little more biased towards small or mid caps have done worst. And unfortunately, most retail will find itself in that small and mid cap space, because we know retail likes that space. That is why the index or the screen looks like something else, but most people feel something else.
What should one do? Jump in because we are in a pronounced bull market, or wait for a decline? This is not like a raging bull market where if you don't buy today, you'll regret it for next 3 years.
I think you jump in if you're talking about 3 years, because it's not going to matter whether you pick the last 100, 200 points. And in fact, nobody gets it. It all looks very cute on paper and some levels for us to talk about. But in reality, it never really happens that you pick the last 100, few hundred, 200, 300 points. So I think that I personally think if one has a 3-year time horizon, one should be in it. It's not really going to matter whether you buy 200 points lower. Even elections, which most people or most retail guys, it kind of takes over their imagination. Yes, the elections will have a few weeks of volatility, but if you're looking at 3 years, I mean the number you put out, I really don't think it's really going to matter. And at that stage, whether you bought at 11.2, 11.5 or 11, again, I don't think it's going to matter. The issue is, are you in it? What's important is the allocation factor. And I realize that a lot of people miss the markets simply because they try to time the last few hundred points. And through practical experience, Nikunj, I have seen that very few people, barring some very savvy investors or institutions, really have the courage to go out and buy in corrections. I mean, last year we saw a very big correction. How many people went out and invested? The answer is very, very few. So the thing is that you have to have that faith, you have to have that time horizon of 3 years, and then, as I said, the last few hundred points is not going to matter.
Right. I hope you were one of those brave ones, though, Atul. But, have to discuss what's happening in the global bond markets and the kind of route that's playing out, be it with the US 10-year paper or with the German bond yields as well. Now, most economists read this as the US stepping into a recession. You also follow the Dow and the 10-year paper charts very closely, Atul. What has been your reading? Do you think this 10-year elongated bull market for the US is now coming to a halt?
See, Aisha, the narrative changes so much, If you go back September, October, people are talking of 4 rate hikes. And then it became 2. And now, if you see someone is talking about still a rate hike, someone is saying neutral, someone saying even a rate cut. So what I'm saying is the commentary is very, very diverse. And, there is no clarity of view. Due to this modern information dissemination being so fast and so many opinions on social media, you find all kinds of opinions. And that's what you are really finding as far as US bond yields. Suddenly on Friday night, the world changed and a new word got added to our vocabulary. We had to all go up and read up on this new phenomena which has happened since 2007, etc., etc. So what I'm trying to tell you is there's a lot of narrative. But this narrative changes also at a dime. One more data number and suddenly the things will change, or some statement. So I think these are very, very fluid things. By these small 1 day, 2 day things, you really can't draw out a longer term trend. However, when I see the US bond yields, which is the 10-year, which is the most popular one, I think that it could head slightly lower till about 0.22. Yes, it is on the softer side, but I really don't see it crashing or seeing it like go back to where it was about 2.5, 3 years ago. So I think that yes, there is a correctiveness, but I think it's going to be calibrated. So I really think that it's not going to trip the global bull market, if you like to say, which is what we are interested in. Even the US, 26,000 on the Dow was a very important resistance area. It couldn't take it out. It's a very important point because there were some earlier focal points. So I think this may trigger a short-term correction, which was inevitable because of the size of the move. However, I don't think it's going to trip the longer-term trend. The longer-term trend, I think, in global equities and in Indian equities is up. And there are going to be speed breakers along the way, and this is just one of them.
Atul, due to the sheer weightage of the Nifty bank and the way it's been moving off late, and how history has indicated that when we see some sort of a decisive move on the Nifty bank, generally the overall markets really tend to follow suit. How have you read into the movement of the Nifty bank off late at these all-time highs?
No, I think that's a very good observation because, just to get into a bit of theory, I look at something called the Dow theory, and it's in the US you have to have the Dow Jones Industrial and the Dow Jones Transportation, and very often a confirmation move, or leadership moves happens from either or. In India, I think we really don't have a transportation index, so to say, but I think the Bank Nifty is very, very important. And also because the weightage of banking in our index is so large that it is very difficult to see. I have observed, and we have done studies at Marathon, that if you have a breakout in the Nifty but the Bank Nifty doesn't support you, those breakouts are very short-lived. In fact, we noticed that early breakouts in the Indian context in the last few years always happens in the Bank Nifty. And if the Bank Nifty takes a leadership positions, I think markets have a more sustainable bull market. So in the current context, as I said, that Bank Nifty broke out into lifetime highs, had a phenomenal vertical move. In fact, I think it went 5% beyond its previous highs. And that, I think, for me is a very, very bullish signal. It's also, I think, a precursor to what I feel would happen in the Nifty. Yes, we will have a correction. We are having one. It will last, I feel, for a little longer. But that doesn't change the overall picture. As I said, that if you are a short-term trader, yes, it's going to matter to you. But if you are an asset allocator, or if you are, because most people have missed this 1,000-point rally because of border issues and elections and all that, and then suddenly they find themselves, oh, the market has really taken off. Abhi to hum correction mein lenge, we'll wait for a correction. I think you are getting one. It's a good time to allocate money, because I still feel that over a longer time frame, over the 3-year time frame, there is money to be made, and these corrections are to be bought into. That's what I think. But the reality is that people will always be fearful. And the quotation that Buffett uses, that be greedy when all are fearful, we all know about it, but hardly anyone ever applies it.
Atul, it's getting very, very stock specific. I mean, let me give you this case. 5 years ago, if you bought into autos and if your choice was Eicher Motors, you've hit a home run despite the correction. Similarly, if you bought a Tata Motors, you've underperformed not only the bank Nifty or the Nifty or the auto index, you've lost significant amount of capital. So where do you think in this bull market there is money to be made? Because we can talk about sector themes and the charts, but within sectors also there is a bull market somewhere and there's a bear market somewhere.
Absolutely, you're very right that for example, I tell you a very controversial sector, consumption, right? I've been very, very overweight consumption, and I really think the sector on a longer time frame has a bull market. But even in the consumption, you'll find some stocks are faltering. But there are some consumption stocks touching even lifetime highs as of Friday. So you will find a very divergent trend, but the themes that I like are, I still like consumption. But again, as I said, it's not a generic across the sector. You will, so one of the things that I look at, we study is really, we like to identify stocks and their behavior in falling markets. Because stocks that go up or hold very well in falling markets are leaders of the next bull market. And they are what are secular trends, and these are the kind of stocks that we look at. So we really don't like to look at these 90-degree angles, that when the market's up, stock going circuit to circuit. I'm very, very scared of that because they come down, and we've seen so much of that happen in the last year. But we like stocks that hit 45-degree angles, stocks that compound at 25-30% year on year. You don't want anything fancy, you don't want anything cute, you don't want stocks that are, and these are the kind of stories that you will be able to identify in the falling markets or corrections that you're seeing. And that is why within sectors also, you will find that in consumption, some are faltering, but some are holding out. In banks, NBFCs, again, PSU banks are a different picture, private banks are a different picture. So there also you will find standout performances. A sector which has been an absolute pariah in the market is real estate. But the way some of them have moved, we'll have to really study their price behavior in this correction, and if stocks hold out, stand out and continue to stabilize and move higher even in corrections, I think you have possibilities of secular markets. So the objective, that the thing we look at is, as I said, we run marathons, and for us it is important to see secular trends in stocks over the next 3 to 5 years, and one of the best ways to identify them is their behavior in corrective markets.
Pick up one of those sectors one by one, Atul. And, since we started talking about the Nifty Bank, I just want to understand whether or not participation is going to become broader within banks. Will the rally spread across, and will PSBs as well join in? Or do you think leadership will remain with HDFC Bank, ICICI and Axis?
I think the PSU banks still have some more time, and there is confidence building is required, because yet they don't inspire that kind of confidence in the charts. We've spoken about some of the private sector banks. They were more in the personal banking space, which did well, and now you have even the commercial banks doing well. So that's a very large segment of the market. I feel that the way charts are holding out, they may be expensive, they are talked about, there's nothing new about it, but at the end of the day, that is where you have been able to compound your wealth at that 25-30%, which is, I think, fantastic for any investor, considering his alternatives that are available in India, whether it's bonds or real estate. So I think that story will continue to play out. Consumption is something I've talked about. I think real estate is again something I've touched on, which I find very interesting. And what's going to be very interesting is what's going to happen to the mid and small cap space. See, a lot of people are trapped in this space, and they are hoping for stocks to bounce back, or almost they're in the prayer category where they are praying for stocks to bounce back. I think that this correction is going to give us a sense as to how this sector pans out. Was that just another dead cat bounce? Was it just an oversold rally? Because market breadth, number of stocks touching 52-week lows, if that again resumes in a small blip, that is not very positive. However, if mid-caps, quality mid-caps hold out in this correction, I think that will be reaffirming belief in those stocks. I personally think that we will have a rally in small and mid caps, but it's not going to be like what it was last year. It's not going to be across the board. It's going to be very selective, and only quality mid caps, I think, are going to perform. So I feel that these all things will, I think, unravel in the next few days, and it is a very interesting time to really see and observe how your stocks are doing, how stocks that you don't have in sectors are performing, and this really gives you a very good sense or insight into the markets going ahead.
Okay. So no sectoral trends you're saying within mid and small caps, right? Very stock specific approach.
No, I think it's going to be very stock specific and quality. There is no compromise on that. You realize that in bull markets, very often non-quality gives you better returns and you get sucked into it. We all get sucked into it. Even I get sucked into it in spite of saying it. Your greed gets the better of you. But when you have corrections, you always land up paying a heavy price for it. So for whatever it is, over the years, it is never beautiful. It's never sexy. It's never exciting. But that's not what you're really looking out for. What you're looking out for are consistent compounders, and that is inbuilt in quality. There is no compromise on that.
So if you have a choice to, let's say, make one trade, like Mark Faber always says that if I bought Japan in 1980s or US TMT stocks in 1990s and China in 2000, you don't need to do anything. So what is that one compounding trade you would say, I want to execute that trade today and go on a very long scuba diving holiday? Which is that one trade you would like to do?
It would be consumption. I think consumption, as I said, it's selective. It's not across the board, but I think consumption stocks have way to go. How I have seen them play out over the years, how I've seen them behave through corrections, I think it's a secular big story for India. So if there's anything that I would like to be in this country with this kind of population, with where we are in our economics and seeing our patterns, consumption patterns, I think I would like to be in that space. As I said, I'm not talking about 1 month, I'm not talking about 3 months, but I'm talking about a multi-year kind of bull market. I feel that I would like to be, or I could buy consumption stocks and sleep well at night.
Buying consumption, India is like saying that a Monday will come after Sunday and before Sunday there is a Saturday. You got to be more specific. You will tell me what exactly should one be doing on a Saturday night in terms of a weekend plan.
No, but Nikunj, that's exactly but that's exactly what you ought to be doing the predictable stuff. You don't have to be extremely exciting. It doesn't mean you have to party every Saturday night and get sloshed. Because even Monday mornings, sometimes even Sunday mornings are very exciting. You could probably go and do a lovely yoga class on a Sunday morning. It could be better than getting sloshed on a Saturday night. So times change and choices change. So I don't think that you need to get into something I can't, obviously, due to regulatory reasons. I know you're wanting me to talk about stocks, but I just think that the attempt to find something new all the time, the need to have an unexplored, beaten down kind of single digit P is something which may not always be the best strategy. It makes money for some people who are great stock pickers, good luck to them. That's not my style. I like something predictable and I like something which, as I said, compounds. Monday comes after Sunday, we all know. But then on a Sunday, if we plan for a Monday, it's always good.
Okay, so perhaps say an Om and buy into some of the consumption stocks is what you're advising right now, a bit of a prayer. But it's been a pleasure chatting with you, Atul. Thank you so much for joining in and giving us your very candid assessment of the equity markets.